All right, welcome back to the ASIS, and I'm John Nelson. We're here with Keith Prather from Armada, and we're going to take a look at industrial production for the aerospace and transportation equipment sector. We just got done talking about industrial production, and overall industrial production, as we looked out, starting to get a little softer in the models, and we're really starting to see that maybe too much of that, within the aerospace sector. And I'll show you what I mean as I'm now make sure I select the correct screen. Okay, so here's what the model looks like. If you compare it to last month, where last month looked like you have the model going on the rise, and now we look like we have the forecast taking a dip. That was, as Keith was saying, you were saying before, that's real head scratcher. Why is it doing that? From what we've seen, math wise, is there's some real softening in the computer and electronic parts sector. It's really negatively influencing this model and putting some strong pressure on that. So it could be a lot of things that go into that, and we'll talk about that particular model later. But one thing I want to draw everybody's attention to, I mentioned this before, is there's a lot of variability in the model. This is really tough to pinpoint exactly where things are going to go. We got to kind of take a look at that general trend, but that variability, if I take a look at where the actuals are for December, and where they're draw a straight line at the horizontal axis, that's right there at that 95 point. And notice that's all 95 going 18 months out on the index is still within the cone of variability. If I was to do the same thing on last month's forecast from the actuals of November and start at 95 again and go straight across, that's still within the same cone of variability for both of them. So we got some wide variances there. It doesn't surprise me that we see a little bit of kind of whipsawing, if you will, in the actual forecast. So I'm comfortable saying it's going to be fairly flat, but it could be even softened based on what I've seen. Keith?
Yeah, that's interesting. So two things, and everything you said there was fantastic explanation. I see two things that I like to point out real fast. So number one, look at where we were in June of 2020, and we'll see it on the next map, but just how far we dipped. And if you look at where the model says we're going in March and April this year, I mean, these are going to feel like really significant highs. This is significant year-over-year growth. And I know you and I were talking offline about some of the producer prices when we look at some of the parts that go into aircraft manufacturing, and how some of them are up significantly year over year, some 60, 70% higher. And so that demand is there, and the whole supply chain is ramping up to try and support what looks like really good solid demand. But then what happens, and the reason why you and I started doing this entire ASIS program, was to get ahead of these business cycles. And what the models are showing us is that sometime at the end of next summer, the models are feeling like we're going into a cycle change, and there's a little bit of a downturn or a drifting, or softening, if you will, kind of in the back half of 22 and then well into 23. And as you said, I mean, if we look at it on a long range basis, it probably doesn't look as dramatic. It's going to feel like maybe just a little bit of a breather, a little bit of a timeout, but production will continue to be strong, especially compared to where we were a year ago. So, we've got a lot of things that are factoring in here, as you said. This particular industry really gets hit hard every time we have a new viral wave, and we start to see passenger traffic really start to drop on the airlines. That doesn't necessarily affect long-term orders, but affects sentiment in the industry, and may affect aircraft manufacturers' abilities to crank this stuff out. I mean, as we said in the very first model, in the very first video that we did, absenteeism in many of these companies, hit 25% over certain weeks over the last, 2 months. And you just can't keep an assembly line going when you have that much interruption, that much disruption. And so that's part of it. And I think that's part of what's weighing on this. We could see a bounce back again. And, if you think about it this way, as you said a minute ago, if it really comes back and trends at the top end of our cone of variability there, then you have that really good, strong, steady growth model that we're expecting based on where demand is and the fact that we haven't been producing a lot of planes over the last 3 years. So again, I do think the outlook improves, and I do think we see it trending a little bit on the upper end of that cone of variability as we move forward.
Okay. And let me see, get to our year over year. You can really kind of see that tail off here again, but we're seeing that tail off, but is that tail off unprecedented is one of the things that I like to take a look in the long range charts for. And the answer is no. Even if you disregard, April of 2020, we'll take a look at this period from, 11/2015 in through 10/2016. Well, the dip is nearly the kind of same large dip. Not as rapidly. You see it way back in here, all the way back in the early 2000s. And then you also have a change. You also see it in the the Great Recession period. You have these huge dips. So this sector has been kind of wildly all over the map. So something like this or a lot of variability is not unheard of.
Yeah, and this is a good moment to remind folks that we took this back and we let these models train themselves over the 20-year period, right? Going back to the right. Beginning, going back to 2000, 2001. And so, a couple things get me. The model right now, or what the analytics are seeing, is an environment that does not look as good as we had like in 2013, 2014, where we were producing up around a 105. So it is reading some real pressure in the model. Again, as if we took the 10-year version of this and we looked at that trend line over the last 10 years, obviously the downturn would not look as dramatic. And again, I think it pops back up a little bit. But on the demand side, air cargo demand is still high, passenger demand is still high. There's a lot of airlines that still need to upgrade aircraft. So I think the demand side still looks strong, for the next decade or more. We just still have a problem on the production side, which is what this measures and what this is forecasting.
Well, the other thing is I want to talk about, I won't get into them completely, but the law of large numbers. And that is when you have really, really large numbers and when you aggregate things together, you have an increased ability to predict how well it's going to, how well things are go. So take a look at our industrial production for manufacturing, or take a look at people looking at the stock market. They have a much better success rate of predicting where the Dow is or the S&P 500 is than they do with individual companies. And it's because their sample size is so much bigger. It gives them the ability to do that. In this sector, which is controlled by a handful of players, where a shift in Airbus or a shift in Boeing, just that one manufacturer can cause the whole chart to go crazy. Whereas let's take a look at fabricated metals, which is a bunch of little small shops, as you've told me before. One little guy going out of business is not going to have the same kind of effect.
Absolutely. Those are great points. Absolutely. I don't have anything more to add to that. It's a great analogy. That we have, and again, as you said, you're right. Boeing's working through a few issues with a few different lines, and that may be weighing on this a little bit. I think that probably the bigger issue is going to be just getting some supply chain pressures back in place. With, oddly, you and I looked at this before we jumped on, but aircraft fasteners, very specific fasteners used in aircraft manufacturing, for whatever reason, right now are extremely tight supply, very difficult to get. Prices are surging. And so, that one item can really jam up and reduce output in a sector like this. And so that's just one example. They may have hundreds of products that are kind of in the same situation. But I do think, again, as supply chain flattens out a little bit and improves and we get the congestion gone, that this starts to trend a little above what we've seen historically. So I do think it will improve.
Okay.
So.
All right, well, that concludes our look at aerospace, and we hope you all will continue to look at the other sectors that concern you. Particularly if you're in aerospace, you really need to take a look at computers and electronic parts. But they all relate together. Anyway, until next month, take care.
Sounds good.